Hi, I'm Ali Paterson, and today on the FinTech show, we're going to talk about how financial institutions are now looking to partner to provide better services than ever before. What can third parties ultimately offer a bank? How easy is it to start and maintain these partnerships? Today, we'll find out that and much more, so stay tuned. Joining me in the digital studio today is Jon Levine, Head of Institutional Banking at fully licensed bank focused on payments, Banking Circle. Banking Circle have just carried out research that provides insight into how banks can develop propositions fit for purpose for their customers beyond the pandemic. Next up is Banco Sabadell's Elena Lazaro, who is the Partnership Manager at their Innovation Inner Sales Hub. Lastly, from BBVA, we have Ruben Gonzalez Blanco, a man who has 20 plus years of experience in software development and is working on digital transformation.
Our paper really went out to a lot of leaders in banks across Europe, trying to understand a bit more about their philosophy when it comes to serving SME customers, and equally, what are the things they're doing to deliver it, and also what are some of the challenges they're facing. And indeed, I think quite positively, we see a uniform view across the banks. They want to improve customer propositions. There's a lot of focus on the SME sector, and that came out in the survey results. And they're also trying to think about how do they address the challenges to actually get the service offering they deliver to be really slick and the best it can be.
BBVA is a traditional bank, and as many other traditional banks, we rely a lot on technology. We are also technological companies, although sometimes we forget about it, but we rely completely on technology, and technology is essential for us. We have been in a process of transforming ourselves into a digital company, which means on one hand that we need to behave like a digital company in terms of software development and in terms of the importance of technology that has in the business. So we were transforming ourselves into a software development company, and as many other software development companies, we needed talent. We needed to partner with other companies that had the talent. We needed to be open because one of the key things in terms of digital transformation is being open to an ecosystem of developers and platforms. So our services could be in any platform, on any app in which our customers are already there. So partnering was essential before pre-COVID, and it's even more essential now because we are facing more challenges in terms of digital transformation. And by agreeing with other companies, by partnering with other companies, collaborating together, we can bring new services and to our customers and improve the way the financial world works for people in general. So it was essential, and now it's even more essential. Also, the FinTechs are usually not as bigger as we are, and sometimes they need our scale in terms of customer base to scale their own businesses. And on the other hand, we also need new products, new services, and talent. So everything is based on collaboration, and we have been always collaborating with a lot of startups and big tech giants, and now we are going to continue even more doing that.
What strategies are we seeing banks use to keep up with digitization, and to what extent are they hindered by their legacy systems? And what I mean by that is it's sometimes quite short-termism to keep the same systems running and updating and basically maintaining the status quo as opposed to starting something new.
Yeah, it's a really good question, but at the same time, it's really complicated because there are many strategies. And I mean, we could be changing all the time because of those changes of customer and technologies, no? But I would like to mention which are the strategies that I think are the main ones nowadays. I will explain why I think that, and also let you know how we are approaching those strategies at Banco Sabadell. The first strategy to keep with digitization, I think, and we have already mentioned, is to accelerate alliances with third parties. Because it's not efficient to do everything by yourself. It's better to focus on what makes you differential, and for the rest of the things, better to partner with others. So That's why banks are already building an open and collaborative innovation. And at Banco Sabadell, we are creating a model, a standardized model to collaborate on a large scale with third parties. So since 2015, we have made more than 20 partnerships already with the startups, and we continue pushing and evolving to facilitate that collaboration. And for example, this month in mid-March of this year, we launched our partnership portal, and we have just announced with our partnership with the Mina Technologies FinTech. So we have really in mind that this is the path we want to follow. Then another strategy, I think it's really important, and more with the COVID presence, is develop new ways of working. So the banks, and not only new ways of working, teleworking for sure, but also how we can accelerate the capabilities of testing with user. Because maybe before we have the branches at the street and we will be able more to listen to those customers, but what is happening now? And also how we implement it quickly, So we need agile methodologies. And when you mix these two, the customer-centric methodology and more agile, what banks could do is to reduce the time for analysis, for development, and for delivery of those solutions that the customers are really asking for. And at Banco Sabadell, we have obtained already significant evidence of the results in terms of a greater time to market and better predictability since March of last year, already with these two methodologies.
What do you think are the main drivers for banks and other financial institutions for choosing to work with external providers? Do you think it's that that kind of flexibility that someone outside of their own systems has? What are the drivers at play here?
So there's a couple of different drivers. So one is, let's think about why a bank would want to do a partnership. It's usually driven by one of two things. One is revenue growth and new commercial opportunity. And number two is keeping customers happy and customer retention. So in the first case, when you're doing something to grow a new product, build a new revenue stream, one of the things you think about is time to revenue. And if you go to a partner who's got the product ready to go, your time to revenue is going to be much faster than if you start from scratch and build it in-house. And so one of the motivators for partnership is simply getting something off the ground in weeks or months rather than months or years. The other thing is if you're building it again for the customer experience and more of a retention tool or a customer satisfaction tool, you can certainly build it, but building excellent products is time consuming and expensive. And again, you're doing this because you think you need it. And so do you need it today? Do you need it in a month? Do you need it in a year? If you need it in, again, weeks or months, or maybe even in a year, you may find that the partnership model is going to be more likely to meet your timeline than the in-house development. And the last bit comes down to what we talked about earlier in our discussion, is just simply the cost. Investment dollars are scarce. Where are you going to deploy your investment dollars, and where are you going to allow somebody else to employ investment dollars to fund necessary build?
Where should a bank kind of walk that tightrope between, do you know what, we don't need a brand new system every year, compared to updating what they constantly have? I.e., in terms of the actual costs and the financial burden to the bank, where should they kind of walk that line between updating the system, upgrading the system compared to updating what they currently have?
Yeah, I mean, it's a fundamental question for an investment, someone who's allocating investment dollars in a bank. Many banks, certainly like the one I worked with for over a decade before Banking Circle, there's so many different products and so many different systems. And in an ideal world, you would tackle all of them. But there's also a finite amount of investment dollars in any year. So you have to use that investment dollar wallet to fund things that are essential. So systems, for example, to help in regulatory matters, credit monitoring, whatever it may be. And that's going to be a recurring feature. There'll be some systems that are just kind of essential new builds. Then you've got maintenance, right? So you have to keep all of the existing non-cloud infrastructure running. Some of it's in pretty old programming languages. You hear the old jokes around the city that you have to find a COBOL programmer, and there aren't many around because no one's taught that language in IT programs today. So that's pretty expensive. And then when you're done with kind of the essential spend, then you have the limited remaining bits of spending to think about enhancement of the customer proposition. And that is a real challenge for banks, is that they, that when you get done funding the essential stuff, there's just not that much left to go around. And you can't build new systems for every business every couple of years. You have to pick which businesses within your bank you're going to bet on, invest heavily in those to make them best in class. And the rest of it, you have to, in our view, you have to find a way to solve for it more cheaply, which is, in our view, a partnership model. And actually, it's not a bad strategy because you can unlock a lot of capability and potential at a fraction of the cost, probably do it faster by working with some partners.
And why do you think a partnership model is necessary for a bank?
I think the C-level really have in mind that they want the impact for the final client, but in innovation, sometimes you don't know what is going to be the thing you have to do for have that impact, no? So at the end, it's normal that you are trying different things. And we have realized in Banco Sabadell that really we think that the partnership could change the services and the product we give to our clients. So the partnership team at the end, it acts as a nexus of union between the bank reality and the third-party reality. And maybe in the future we are not going to need this partnership team because it's already normal to them like to collaborate day to day. But nowadays we need it, and we need it for three main reasons: internally and externally. I think internally, what we do at the partnership team is to create a standard process that enables this collaboration, because we have to align the involved departments around that unified process, because those departments has their business as usual. So it's important to be really agile and to have really in mind what we are going to ask them to do. Second thing is to understand the bank's focus areas we have already mentioned and look for the third party's opportunity that really have impact on those areas. And related to that is to gain buy-in in management. And that we are going to achieve by giving real impact with real metrics that we know how it's creating value for the bank.
I think the separation between business, product, and technology is going to be blurred in some way. And we are we are going to work more close all together. And technology skills would be not only in the engineering part of the company, also in the product and in the product teams. And this will create companies and traditional banks more similar to the digital companies we all know, in which there is a close collaboration between technology, between product teams, and everybody in the company has a background in software development, because at the end of the day, what we are providing are software-based products, and the understanding how software is developed, understanding the implications of certain decisions when it comes to developing software is going to be something that everybody in the company will understand in some way. Unless the transformation of the traditional banks into software development companies happen, I don't foresee a nice future for the banks that don't do that. I think banks need to transform themselves into software development companies, being more open to share their technology, to collaborate with others, to create technology with other players in the ecosystems, and the whole industry needs to transform, because we have been relying on only on vendors, on paid commercial packages, and we need to start behaving like other software development companies, working more with open sourcing our own technology, collaborating with others, and making internal changes in the way we work, in the skills we have, so we can create products, digital products based on software more efficiently and with better time to market. I think we are still on that process. We need to change a lot. We are companies, traditional banks have a lot of history, a lot of legacy that is not only technological legacy, it's also mindset legacy. We were operating completely in a different way, but I think we are in the right path to do that. And it's something that I think we are going to see in a lot of banks. We are going to see transformation, internal transformation towards better ways of working, in which technology is even more relevant than it is today.
How are financial institutions pivoting to respond to the ever-changing needs of clients in the digital age, whilst at the same time remaining profitable?
Yeah, so banks are making lots of pivots. They are investing, they're partnering, they're even taking stakes in FinTechs to get access to new features and functionality and capabilities. So banks are alive to this. And in many boardrooms, there are discussions taking place about the customer journey, the customer experience, digitization. Here in the UK, it's certainly very prominent that the banks are thinking about a digital customer journey. Most banks now have some kind of digital transformation officer. So the pivot's happening. And again, there's a debate within the banks about what do they build, how do they partner, what do they buy? And that's playing out across institutions in ways that best suit their business model.
Can we expand a little bit around partnerships there? Because I know we talked about this earlier, but you mentioned that banks are taking stakes within FinTechs, but also do you think they're starting to become much more intertwined with the entire FinTech ecosystem?
They are. So there's different types of models for a bank that's working with a FinTech. So one model is very much the way you might have appointed a correspondent bank in the past. You might contract with someone like a Bloomberg or a Refinitiv for a data feed. You just go out and you negotiate a commercial contract, terms of a service, and proceed. And in fact, that's with Banking Circle how we normally work with banks. They look at us much the same way they would look at a historical correspondent bank relationship. There are different models that we see in the market as well, where a bank will actually take an ownership stake in a FinTech. Usually it's a minority stake, but this happens as well. It tends to happen with slightly earlier stage FinTechs, where the FinTechs may need, they certainly benefit from the capital of the large institutions investing. The large institutions investing benefit from the resource and the expertise that the FinTech brings. But actually, there's also a mutual symbiosis by having that minority stake of the big bank in the smaller FinTech. And we do see that playing out, again, in many different cases. For example, Santander has taken a stake in eBury Partners. A few banks have a stake in Forum 3. And there's many more examples like this. So there's different ways the partnership has evolved.
Do you think there was a period a few years ago where I remember Credit Suisse actually came out and talked and even referred to it as innovation theatre, where a lot of banks would do things almost for that kind of novelty? Do you think that's now been not so much disproven, but is more on the outside now, and that these partnerships and these stakes are actually making things happen actionable within the bank?
Yes. So there's been a maturing of the market. And these days, if someone is going to spend time investing in a partnership, they do want to know what they're getting out of it. Certainly in our discussions with banks, they're very focused on customer outcomes, revenue potential, and the nuts and bolts of how it's going to work. And this is not done to make a show, it's done to change the way things operate for their customers.
Well, that's all we've got time for this week on the FinTech Show. I'd like to thank all of our guests for joining me today in the digital studio, and to you, our viewers at home too. You can of course catch the rest of our episodes and much more over at fintechf.com, and of course on our YouTube and LinkedIn channels. Bye for now.